the FTX founder, FTX being a cryptocurrency exchange market that was founded by, make sure we get the name right, Sam Bankman-Fried, has collapsed. They have filed for bankruptcy, and they have found that they have been doing some absolutely shady shit. And as such, Sam Bankman-Fried, the disgraced founder of the collapsed cryptocurrency exchange FTX, was arrested in the Bahamas on Monday after U.S. prosecutors filed criminal charges, according to a statement by the government of the Bahamas. SBF's arrest followed receipt of formal notification from the United States that it has filed criminal charges against SBF and is likely to request his extradition, the statement said. Mr. Bankman-Fried was under investigation by the Justice Department over the sudden implosion of FTX, a $32 billion company that filed for bankruptcy on November 11th. Prosecutors of the District of New York confirmed that Mr. Bankman-Fried had been charged and said an indictment would be unsealed on Tuesday. Tuesday would be tomorrow from December 12th. And it is unclear what the charges are, but prosecutors have been examining whether FTX broke the law by transferring its customers' funds to Alameda Research, a crypto hedge fund that Mr. Bankman-Fried also founded and owned. Okay, so what this guy has done is he has created what is essentially a pyramid scheme out of his cryptocurrency. So he created a new cryptocurrency like Bitcoin and Ethereum and all that stuff, and he set it at a value and then sold it to the world as something that had value, right? And the only way that his company stayed afloat is by convincing more people that his cryptocurrency had value. So people would buy the cryptocurrency and it would go up in value. And if it went up in value, then the loans that he was borrowing that the company FTX was borrowing against the value of their cryptocurrency that they created were fine, because they could always borrow their way out of the debt. If they borrowed $2 billion worth of their own or $2 billion and put up $2 billion worth of their crypto as collateral, then their crypto would go up in value, and then they could just refinance the $2 billion into the new inflated value of the cryptocurrency, and they could just keep going up and up and up, and it was all just money created out of thin air, essentially. And but it all depended on people being convinced that this cryptocurrency had value, so it had to keep rising. And what happened is the FTX bubble, it burst. People stopped believing that it was more valuable than where it currently was, so they stopped buying their cryptocurrency at ever higher and higher prices. And as a result, the whole borrowing debt on more debt on more debt, and as long as everything went up, it was fine. That whole house of cards collapsed. And then it came out that then a bank run happened. Essentially, FTX is basically a bank. They have taken your money in exchange for their cryptocurrency, which is basically a promise that if you want that value of money back, they'll give it to you. So it's essentially a bank, right? And so a bank run happened. Once people felt that it wasn't worth having this cryptocurrency anymore, they tried to take their money out. Except, and this is where the illegal stuff happened, FTX had been using customer money, customer investments, and channeling it into other side hustles that the founders had come up with, mainly being Alameda Research, which is essentially a hedge fund where a bunch of people's money gets invested by other people. You know, you say you're going to give the hedge fund $100, and then 10,000 other people say they're going to give the hedge fund $100, and then that hedge fund takes all of that money and invests it to try to make gains on it. And so he had a hedge fund, Alameda Research, that was crypto based. So the money would come in and he would speculate with it on the crypto market. The problem is when they did that, they were violating their own terms of service, where FTX was not supposed to invest user money of FTX into other things. They were supposed to sit on it and maintain the bank account so everybody could pull their money out, and they weren't doing it. They were spending it. They were spending it in copious amounts. So when people come knocking for their money that they've invested in FTX doesn't have it. And as a result, the whole thing collapses. And so there are people whose entire life savings are just wiped out because FTX was illegally spending their money to speculate on other cryptocurrencies. And when the whole crypto market fell apart, the whole house of cards where everything had to keep growing, which is what a pyramid scheme it just disintegrated. It disintegrated overnight, and then the finances came out for the company. It became clear that they were doing some stuff they weren't supposed to be doing, and as a result, an investigation was launched, and I can never remember his name, Mr. Bankman-Fried, the founder of FTX, is now being arrested in I don't know if it's record time, but it's, fast this guy got arrested. Normally it takes months and months and months for these investigations to result in arrests and criminal charges and especially extradition from another country. And this happened over the course of like a month. FTX just collapsed, and they're already trying to nail this guy to a wall. So, it's going to be interesting to see what happens with this, because everything that I described about how the FTX cryptocurrency market worked is essentially how securities work. It's basically the exact same thing that happened in the 2008 financial crash with mortgages. They were selling mortgage-backed securities. It was a speculation on interest payments for mortgages coming in. And when people started defaulting on their mortgage and couldn't pay it back, well, now the securities that the banks were selling people, which the profit on that was coming from people's interest, well, now they were no longer making profit. And since they were making profit, they couldn't pay the debt that they borrowed to take out to buy the security. And then the whole house of cards just collapsed overnight. So FTX is basically a smaller, faster version of 2008. And as a result, it's very likely that these crypto markets will get regulated by the FTC as securities after this. They're already looking into it. Multiple countries are looking into it. The United States is starting to sort of pick up the pace on what they're going to do with the crypto markets. And it seems that this FTX collapse is going to result in crypto potentially being regulated as securities, because right now it's not regulated at all. So this highly speculative, inflated cryptocurrency bubble is what happens when people have money that they think they can put towards something that's going to make them money, and this bubble happens. It's entirely based around investor expectation. If investors expect they're going to make money, people keep buying it, the value goes up, and everybody's happy. But as soon as the chink in the armor happens, as soon as people start to think, maybe I might not be able to make the money that I'm putting into this, they pull. And then when they pull, the value goes down, and when the value goes down, more people pull, which makes it go down faster and faster and faster until bank run and FTX collapses and crypto starts to look like not so good an investment at all. And that right there, is the flaw in the logic of crypto, in my opinion, which is there's nothing backing it. The only thing that gives cryptocurrency value is people say cryptocurrency has value. Like, if you have $100 worth of oil and then the price of oil collapses, you still have oil. If you have $100 worth of oranges and the price of oranges collapse, you still have oranges. If you have $100 in Bitcoin and Bitcoin collapses, you have nothing. You own some keystrokes on a computer. There's no value to the thing that you own. So, not having a way to back it up is the fundamental flaw in cryptocurrency. It's the reason why every single developed economy in the world has a centralized currency. Is because if you have $100, technically all you have is a piece of paper. Like, say you have a $100 bill. All you have is a piece of paper. But the United States government, which represents the entire country, which is not made of paper, says that $100 piece of that piece of paper with a 100 on it is worth 100 of some currency. It's still just a piece of paper, but the entire country of the United States is dependent upon that piece of paper representing the value that it says on that piece of paper. And the United States government will back that up. That's the value of the dollar. That's the value of the euro, of the yen, of the colon in Costa Rica, the peso in Mexico, the Canadian dollar. Like all of those places, the country is providing the value of the dollar. Whereas in cryptocurrency, the value of your cryptocurrency is measured in dollars, because the crypto doesn't have an inherent value of its own. It's measured against the dollar. So the value of the cryptocurrency is the dollar. And since there's no product that you can then have later, there's no oranges, there's no oil that you can have. If the market collapses, you're left with nothing. And that's a security. That is what a security is. So it's very likely that the United States will regulate cryptocurrency going forward as a security, and it will be overall a good thing because it'll add a level of needed regulation to a market that potentially can wipe out millions of people's savings at this point. Like, crypto's gotten out of hand, like real bad.